$1,000 is not a life-changing amount of money, but in the context of the financial markets, it is a significant milestone. It marks the transition from someone who only reads about markets to someone who has actually generated income outside of their regular job. To reach that point, we have to acknowledge a difficult reality. Trading is not a path to easy wealth. Most people who rush in without a defined process will lose their capital. We are avoiding the high-risk, impulsive methods that lead to those losses. Our goal is to build a system that is simple, repeatable, and designed to last. For this specific milestone, we are using the foreign exchange market. It allows you to start with a smaller capital base, between $200 and $500, as long as you only use money you are prepared to lose as the cost of your education. Once you move from theory to your first $1,000 in profit, you've built a foundation. That same process can then be scaled to $5,000, $10,000, and beyond. Before looking at a chart, you have to understand the environment. Markets move based on the collective emotions of participants. Generally, when traders are fearful, they sell. When they are greedy, they buy. You also need to recognize that large institutions, banks and hedge funds, drive the majority of market volume. Your objective is not to outsmart them, but to identify the direction they are moving and follow them. This involves two core principles: trends and mean reversion. While prices move in specific directions, they eventually return to their average value. Profitable trading requires waiting for a repeatable scenario where the probability of a win is higher than a loss. This is called having an edge. Respecting these market forces is what separates those who treat trading as a profession from those who treat it as a gamble. The first step in building that edge is setting up your workspace. Open a daily chart and apply the 50-period exponential moving average, or 50 EMA. This line tells us the trend. On the left, price stays above an upward sloping line, an uptrend for buy signals. On the right, price crosses a flat line repeatedly. This ranging market has no clear direction, so you do not trade. By filtering out these sideways periods, you avoid the low probability environments where most beginners lose their money. Once you identify a trend, you must wait for a pullback. Instead of buying as the price is already moving up, you wait for it to drop back down to the 50 EMA. At that line, look for a trigger like a hammer candlestick. The long lower wick shows buyers rejected lower prices. Alternatively, a bullish engulfing pattern, a large green block swallowing the previous red one, shows buying pressure has taken control. These signals are effective because both human traders and automated algorithms use the 50 EMA as a reference point. When the price touches it, they often enter the market at the same time. Before entering, define your risk. This red box is your stop loss, placed below the moving average to automatically prevent larger losses. Next, set a profit target, the green box, twice the size of your risk to remain profitable. To manage the total account risk, you use a position size calculator. You ensure that if the stop loss is hit, you only lose 1% of your total account balance. This 8-point checklist covers everything from the daily trend to news events. You only enter the trade when every box is checked. Following this checklist strictly is what transforms a set of charts into a disciplined business process. Starting a $500 account with a 50% win rate yields gradual growth, reaching approximately $710 by month 6. This consistency unlocks funded accounts. With $10,000, that exact same process generates between $600 and $900 in profit per month. The math works, but the challenge is emotional. Greed might tempt you to move your profit target further away, while fear might make you close a winning trade too early. One of the most common mistakes is revenge trading, trying to immediately win back a loss. If you lose a trade, you must step away from the screen for at least 30 minutes to regain your composure. The math is sound, but it only produces results if you can manage your own impulses during the process. Success depends on a daily routine. Every morning, you check an economic calendar for high-impact news. These events cause price spikes that can ignore your technical setup, so you avoid trading during those windows. You then monitor the charts during your active session. Whether you take a trade or not, you end the day by recording your observations in a journal. You can start building this routine today using free charting software and a demo account. This allows you to practice the system with zero financial risk until you are consistently profitable. This foundation is the first step. In our next segment, we will explore the advanced setups, a step-by-step broker guide, and securing a funded account. Reaching that first $1,000 isn't a matter of luck. It is the predictable result of following a consistent process, day after day. We have established the market rules. You understand the simple three-part system, the pullbacks to the 50 EMA, and the math to reach your first $1,000. Your foundation is locked into place. Now we complete the picture. In this final phase of your training, we will deliver 5 specific tools. We are going to cover advanced technical setups to increase your entry opportunities. We will walk through the exact steps to verify and set up a legitimate broker. We will install strict risk guardrails to protect your capital. We will break down how to leverage prop firm capital. And finally, we will give you a 90-day execution plan. This is a comprehensive system, but you do not need to master every single piece of it to see progress. You only need to select one specific path, one specific pattern, and apply it with discipline. Reaching $1,000 in trading profit is not a mystery of unpredictable market behavior. It is about replacing emotional reactions with a measured, repeatable routine of execution. Take a look at this minimalist line chart. This is the support bounce, a powerful setup for beginners. When price falls to a specific level and bounces upward at least twice, that level establishes strong support. It indicates where institutional orders have historically been placed. When price returns to that support level for a third impact point and a signal like a hammer candle forms, you are trading alongside those returning buyers. Next is the moving average crossover. This setup uses a 20 EMA to track recent price action against your 50 EMA, which tracks the medium-term trend. When the shorter 20 EMA crosses above the 50, it signifies that recent price action is building momentum relative to the historical average. You wait for the cross, wait for a slight pullback, and enter as the new trend develops. Notice the descending trend line on this chart, forming a distinct W shape. This is the double bottom reversal pattern. Price tries to push lower twice and is rejected both times. When price breaks above the middle peak of that W, it confirms that buyers have absorbed the selling pressure. That breakout is your entry signal. The inside bar pattern represents market consolidation. You look for a large mother candle followed by a smaller candle completely contained within its range. Think of it like a heavy steel spring being compressed. When the price finally moves past the mother candle's boundaries, that energy releases, often leading to a significant move in one direction. Finally, we have the Fibonacci 61.8% retracement level. This mathematical ratio is widely respected in financial markets. Because so many professional traders and institutional algorithms are programmed to act on this specific level, a bounce at 61.8% often becomes a self-fulfilling prophecy. You have 5 options here. You do not need to trade all of them. Reaching your first $1,000 is more efficient if you pick exactly one of these patterns and become a specialist in how it behaves. Let us look at how real beginners applied this. Take Ryan's profile, a 24-year-old customer service rep with $600. Ryan spent 45 days purely on education before he ever opened a demo account. He specialized exclusively in GBP USD pullbacks and reached his $1,000 goal in 10 months through methodical patience. Diana is a nurse with a demanding schedule. She could not watch the screens during the day, so she used daily timeframe charts. She placed pending buy limit orders at the 50 EMA and let the market come to her. It took only 20 minutes a day to manage her positions and reach her target in 11 months. Carlos only had $300 in personal capital. He knew compounding that amount would be slow, so he practiced specifically for the strict drawdown and profit rules of a prop firm challenge. By proving his skill on a demo account first, he secured a $10,000 funded account and hit his $1,000 goal in 6 months. Michelle had previously lost $400 on a scam offshore broker and quit. Her story proves that a past loss does not mean trading is impossible. It usually means the approach was flawed. She returned with proper education and a verified broker to correct her course. Brandon was a college student with only $300 to his name. He spent 3 months trading on a demo account between classes. He used a portion of his savings for a small prop firm challenge, which eventually allowed him to scale into a much larger funded account. These 5 individuals had different schedules and starting points, but they shared one dedication. They all utilized a demo account to prove their consistency before risking their actual savings. Before you deposit money, you must verify your broker. Go to the NFA or CFTC database online and search for the firm. If they are not registered and regulated, do not use them. This step is essential to ensure your capital is held by a legitimate institution. Once verified, open a free demo account. Oanda is a strong option for beginners because it allows you to start with any amount. Download the platform, find the indicators menu, and add the 50 exponential moving average. You now have a professional-grade setup at zero cost. Next, limit your scope. Focus exclusively on 3 highly liquid pairs: URUSD, GBPUSD, and USD-JPY. These pairs offer the tightest spreads and the most reliable trends for a developing trader. Use this demo environment for at least 3 months. The goal is to build automatic execution habits. By following your 8-point checklist every time, you ensure that when you eventually transition to real money, your technical process remains exactly the same. New traders often struggle with 3 specific behaviors. First, risking more than 1% per trade. Second, strategy hopping the moment they face a loss. And third, ignoring the higher time frame. If the daily chart shows a massive downtrend, buying on a 15-minute chart puts you at a statistical disadvantage. Winning streaks can be just as dangerous as losing ones. After 5 wins, you may feel untouchable, leading you to increase position sizes or ignore your 8-point checklist. This overconfidence often results in a single large loss that wipes out days of progress. You need non-negotiable rules for losing streaks. If you lose 3 trades in a row, stop trading for the day. If your account drops 10%, return to the demo account for 2 weeks. This allows you to identify if the issue is a change in market conditions or a lapse in your own discipline. This grid represents a 100-trade sample. Even with a winning strategy, you will encounter clusters of red dots. This is standard statistical variance. A coin flipped 100 times will eventually balance out, but it will frequently produce several heads or tails in a row. Shifting your focus to a 100-trade sample changes how you perceive risk. It reframes a single loss not as a failure, but as a standard data point in a much larger set, helping you manage the stress of individual drawdowns. Look at the bar on the left. If you risk 1% on a $500 personal account, a good month might yield $50 in profit. At that rate, reaching your first $1,000 in earnings takes significant time. Now look at the right side. By tossing a challenge and accessing $10,000 in firm capital, you apply the exact same technical skill to a much larger base. Reaching $1,000 in profit percent becomes a matter of months rather than years, simply because you have more leverage. Different firms offer different benefits. My Forex Funds is known for beginner-friendly drawdown rules. The Fivers provide scaling for low starting capital, and FTMO is highly regarded for its long-term partnership and strict habit-building requirements. Do not pay for a challenge until your demo results are consistently positive for at least 30 trades. You must prove you can manage a practice account before you attempt to manage a funded one. Prop firms are tools for traders who have already developed their skills. They provide the capital, but you must provide the discipline to protect it. This roadmap provides your schedule. During the first 30 days, the foundation phase, you focus entirely on education. You complete the Baby Pips course, learn your platform mechanics, and start logging practice trades on demo. Days 31 through 60 are the development phase. This is where you test advanced setups and record your data. By the end of this month, you should know which specific pattern and currency pair gives you the most confidence. Days 61 through 90 are the decision phase. If your demo performance is positive, you are ready to transition. This means either opening a live account with microlots or applying for a prop firm challenge. Following a documented 90-day schedule helps you move past the cycle of random entries. It provides the structure needed to measure your progress objectively and refine your edge. Ryan, Diana, Carlos, Michelle, and Brandon, none of these people started with an inherent advantage or massive initial capital. The distance between where you are and where they ended up is bridged by the slow accumulation of experience. They encountered the same market conditions you will. They just chose to meet them with a specific, practiced plan. The path ahead is not easy. It is a guaranteed struggle. You will face confusion and you will take losses. The traders who reach the $1,000 milestone are simply the ones who push through that frustration and keep executing their system. The tools are provided and the roadmap is clear. The only remaining variable between where you are now and your first $1,000 is the decision to begin the process today.